So very good morning, afternoon or evening as the case may be, depending on the country you are based in, and welcome to the very first edition of Fridays with Fintelekt, something which we have started while we're in the midst of the COVID-19 pandemic, but which we hope to continue beyond that as well when we all return to our normal lives. My name is Shirish Pathak. I head Fintelekt Advisory Services, and for those of you who don't know what we do, we are focused on research, training, and advisory in the domain of anti-money laundering and countering terrorist financing and related financial crime and investigation matters. In Fridays with Fintelekt, we will publish a webcast every Friday in which I will engage in conversation with thought leaders in the AML CFP domain in our quest to bring you additional knowledge and insights in this fast-moving field. This webcast will also be available as a podcast on Spotify and Anchor.fm later on in case you would like to view it again or recommend it to other people. My guest today is Tom Keatinge, Director of the Center for Financial Crime and Security Studies at the Royal United Services Institute, or RUSI as it is popularly known, based in London. A little bit about RUSI. RUSI is an independent think tank engaged in cutting-edge defense and security research. It is a unique institution founded in 1831 by the Duke of Wellington and embodies nearly 2 centuries of forward-thinking, free discussion, and careful reflection on defense and security matters. The Center for Financial Crime and Security Studies within RUSI, since its launch in 2014, has become the research-led partner of choice for policymakers and private sector actors seeking to improve the effectiveness and efficiency of current approaches to tackling money laundering and terrorist financing both in the UK and globally. Since the discussion points in this webcast are related to terrorism, terrorist financing, and related criminal activity, I could think of nobody better than Tom Keatinge to have here with us today, since he is a globally acknowledged expert on these matters. So Tom, thank you so much for joining us here today.
Thanks for having me.
So Tom, to start with, the pandemic is causing changes in business models of terrorist organizations and organized crime groups with increased criminal activity around digital platforms and cyberspace. What is your recommendation to regulators and especially to the banking sector to better understand, identify, and mitigate this risk practically and effectively?
Yes, well, again, thanks for having me. Indeed, surreal times that we're living in and to which we're all having to become accustomed, we hope not for too long, but certainly for the foreseeable future. And everybody is having to become accustomed to these new ways of operating, not just those of us working in offices or on building sites or driving transport around the world, but also criminals and terrorist groups. And so it's worth just for a second imagining the challenges you face as an organized crime group who is used to being able to move goods around the world, bribe officials in ports, operate in the streets. Of course, they're facing many of the same challenges that everyday business is facing, difficulties transporting their goods and so on, as I mentioned. And of course, imagine being a drug dealer standing on a street corner. Now you might be the only person standing on the street corner because the streets are completely empty. So for all these illicit businesses, they are having to reconsider their business models. There's some interesting statistics from law enforcement around the world that suggest that actually certain forms of crime are dropping quite precipitously at the moment. But of course, criminal groups are creative, and there are a number of, I suppose, issues that we see now that they can take advantage of. So people are spending much more time online. We're all working from home. We're all scouring the internet for products that perhaps we need that are in short supply. And so the risk or the opportunity for organized crime groups to take advantage of online frauds, online scams, selling people things that never turn up in the mail, all that sort of thing is considerable. That perhaps you click on a link that you're not expecting, that is a risky link, and you put in your bank details, and then it's too late before you realize that your bank details have been stolen, and now people can access your finances. So for organized crime groups, unfortunately, are creative, and I suspect their businesses will be back in a healthy shape sooner than international economy and related businesses. For terrorist groups, of course, similar challenges. Crossing borders obviously is now more difficult with countries having closed down airlines, having closed down airports, having sealed their borders. So travel is more difficult. But again, also opportunities for terrorist groups, because we see both in the extreme right community and also in the jihadi community, the narrative emerging that the COVID-19, the coronavirus, is something that they can take advantage of. So for the extreme right, saying, well, this affects foreigners, or it's a disease that is spread by foreigners, so enforcing that narrative. And then on the jihadi side, we see narratives suggesting that the disease is somehow is something that only affects infidels. But also we've seen from Islamic State type publications suggestions that indeed even jihadis should be observing social distancing and should be staying at home. So this is affecting both organized crime groups and terrorist groups in many of the same ways as it's affecting all of us. So what does that mean for banks and for supervisors? Well, clearly, if we think about banks in the first instance, banks are suffering staff shortages. Staff are having to work from home. They can't get to the office. Maybe they can't access the normal systems that they would normally be accessing. Maybe they're having to redeploy staff. So staff that perhaps were focused on one area of compliance are now being redeployed to focus on KYC, to increase the ability of banks to deliver loans to businesses that are struggling. What is business as usual? Of course, what we know is that when banks monitor for suspicious transactions, they are looking for anomalies in the transactions undertaken by their customers and their clients. But of course, at the moment, we're probably all using our bank accounts in ways that we don't normally use them. So we're making more purchases online, perhaps, than is traditional. We're not eating out as much as we would have done. All these sorts of things mean that our financial footprint today looks very different to the way it looked 1 month, 2 months ago. And so for banks, that presents a challenge, because their ability to identify what looks unusual perhaps is more complex than it was. And then, as I say, they're having to make staffing decisions. If they have a shortage of staff, or if they have difficulty accessing certain systems, then where are they deploying their staff? Are they having to decide that some areas of compliance are less important than others, and therefore move staff away from low priority areas to high priority areas? And that's something which I think supervisors will be looking at very closely. Just to talk about supervisors for a moment as well. Supervisors, we've seen guidance from the Financial Action Task Force, which I think was extremely helpful, which has been reflected by other regulators around the world. I saw an interesting note from the HKMA in Hong Kong the other day. We've had similar letters to CEOs, to chief executives from the Financial Conduct Authority in the UK. FinCEN in the United States has put out some excellent guidance that I'd recommend everybody looks at, essentially encouraging banks to use innovative solutions to conduct KYC and to conduct their compliance checks. And I think it's very possible that maybe one silver lining from this terrible crisis, this pandemic crisis we're all facing, one silver lining might be that supervisors and financial institutions finally come to an agreement on how one takes a risk-based approach to conducting compliance. Do you really need to have face-to-face KYC checks? Or can we actually, once and for all, start using video phones, smartphones, these kinds of new technologies for doing KYC checks? Just as an example, do you have to go into the bank branch? Is compliance for compliance sake? This culture that we all know has become ingrained, where compliance is undertaken simply to keep the supervisor happy and isn't actually really strengthening the integrity of the financial system. Is it time for us to have a proper conversation about revolutionizing, or at least properly implementing, these risk-based approaches? Because at the moment, that's what banks and supervisors are having to do. They're having to implement risk-based approaches because they don't have enough staff, because of sickness, or because of the pressures on their operations. So I hope that supervisors really grasp this opportunity to start to act and encourage banks to act on a risk-based basis, encourage greater use of technology and innovation, and not just encourage it, but make it happen. Don't just sit there and say, please use more technology, but actually more emphasis on implementing risk-based approaches.
Thanks, Tom. Tom, we've spoken about how the criminals and terrorists might react, and also, to an extent, how supervisors, banks, and the broader regulated sector may react to the pandemic. But are there any specific lessons that you think we might learn for the future through this?
Well, as I say, I think I really think that the banks and supervisors are having to rethink the way they operate, and supervisors are clearly, from the communications that they are putting out to the banks, like I mentioned, FinCEN, the FCA, the HKMA in Hong Kong, just as 3 examples. These supervisors are making it very clear that their expectations of banks are, if not shifting, then more flexible. You've obviously got to protect the integrity of your organization, but let's do that on a risk-based basis. Let's not ask every little old lady for KYC information when we know she's a little old lady and she doesn't present a threat to the system. But let's focus those inquiries on supporting KYC for businesses that need loans at a time when they're really suffering. So let's make risk-based decisions and not simply have 10 people doing a job which we all know presents isn't really protecting the bank or the financial system from risk. So I think better risk-based approach to thinking about financial crime, and then a greater use of technology, accepting that technology is going to make the system smarter, and let's encourage that and drive that forward in a really proactive way, rather than standing on the sidelines and saying, come on banks, use more technology. Well, the supervisors need to encourage that to happen, and at the moment they could do better in that regard.
Right. So Tom, on that note of a risk-based approach, RUSI recently published an occasional paper on advancing a risk-based response to terrorist financing, in which you cover how even after 2 decades since George Bush announced the war on terror post 9/11, responses to terror financing have arguably not evolved enough to remain aligned with the diversification of terrorism risk, the increased role played by the private sector, and whether the global response to terrorist financing as envisioned following 9/11 is still even relevant. So could you take us through some of the key takeaways of this paper and your recommendations on what governments, regulators, and banks should be doing to step up their game exponentially to really tackle this risk?
Yeah, sure. So thanks for highlighting that paper. We call it a sharper image, and really that's what we are recommending, is that we look at terrorist financing in a much more granular and much more nuanced fashion. So there are various parts of the report. It's a long paper, as you will have discovered. There is hopefully a useful summary video on the RUSI website as well, which we produced. There are various parts to the report. The first part, we look at the general approach, the conceptual approach that's taken to terrorist financing around the world. And I think over the last 20 years, there's been a tremendous focus on this attempt to cut off terrorist financing, as if there was a pipe through which all this money passed, and somehow one could magically find a place to cut it or a tap to turn off. And I think whilst we're not suggesting that we should be de-emphasizing that requirement, because of course if you can identify terrorist financing, you should stop it, you should freeze it, you should seize it per global regulations. But I think what we're also saying is that finance is a tremendously valuable intelligence tool, and we know that money is going to pass through the system, and setting ourselves the objective of just stopping terrorist financing in its entirety is really harsh to say, but I think it's a fool's errand. Yes, we should be thinking about that, but we should also be remembering that finance is a very valuable intelligence tool. Financial transactions link people together. If I pay you, $5 or I pay you $5 million, you and I are linked by our banking transactions. So whilst depriving terrorists of finance should absolutely be a goal. We need to balance that goal with the often forgotten second half of the equation, which is exploiting financial intelligence to detect and disrupt networks. And those two approaches will be more or less applicable depending on what type of terrorist risk you are looking at. So the second part of the report looks at different forms of terrorist group to then try and say, okay, well, what approach is more applicable in each of these cases? So we look at three types of terrorist group. We look at what we call territory controlling groups. So think of Islamic State that was using the oil under its control or taxing the population under its control to raise money. Another group might be Al-Shabaab in Somalia, which has for many years lived effectively off, again, taxation of local population, but also the charcoal industry. Then we think about organized crime type groups, so groups that really operate as very effective multinational businesses. In many countries around the world, Hezbollah is designated as a terrorist organization, and Hezbollah, as we all know, operates, say, very effective businesses around the world, moving products and money between Latin America, Africa, Europe, and other parts of the world. So that's another form of terrorist group, an organized crime type group. And then lone actors and small cells, so individuals or small groups who mount terrorist attacks. And each of those types of group, as we detail in the report, operate different financial modus operandi. So territory controlling groups live off the land. So if you put sanctions in place and so on, they might have some effect, but realistically, these territory controlling groups are living off the land. And so how are we going to disrupt? How are we going to cut off their funding? Very difficult to cut it off in the banking sector, at least. And indeed, the coalition fighting Islamic State realized that the best way to disrupt Islamic State financing was to drop bombs on their oil wells. Organized crime type groups, well, yes, they are moving money across borders. So disruptive activity, sort of the anti-money laundering approaches could certainly play a valuable role there. And for lone actors and small cells, well, you know, unfortunately, you can rent a van and rent a truck and crash it into people on a Friday night, a busy Friday night, and the rental cost is, you know, just a few tens of dollars, $50, $60 to rent that truck. So very difficult to identify that kind of financial transaction. So when you think about those three types of terrorist groups, and of course there is some blurring between them, they're not individual silos, but we found it useful to think about these individual groups to promote a debate. There are three objectives that you have: minimize access to resources. Well, in some of the cases, for example, with territory controlling groups and organized crime groups, yes, minimizing access to resources is a good objective, but really not when you're thinking about lone actors and small cells. Bringing terrorist financiers to account, so gathering financial information to prosecute people. Very difficult to do that with a territory controlling group when they're in the middle of Syria or in Somalia. But yes, you can use financial information to help prosecute people who are running organized crime type terrorist groups. And then maximizing the impact of financial intelligence. So again, using financial intelligence to identify key actors in these groups. So that's the second area we looked at, is kind of what different forms of response should we be using to tackle different terrorist groups. Then we looked at new technologies, social media. I won't dwell on that, but I think it's important that we recognize that when the counter-terror finance regime began at 9/11, the global effort anyway at 9/11, we didn't have Twitter and Facebook and Telegram and all these things, nor did we have new payment technologies that we have today. And so we need to make sure that our response to terrorist financing reflects and respects the fact that the global financial system has changed quite dramatically since the time of 9/11. And all of this, of course, is to think about effectiveness. How do we ensure that our system is effective? The Financial Action Task Force, as we all know, conducts these evaluations every 7 to 10 years of countries and their effectiveness. And the data is not good. Immediate outcomes 9 and 10, which are the two FATF immediate outcomes that assess the effectiveness of countries on combating terrorist financing, make pretty grim reading. Only respectively 4% and 2% of countries have a high effectiveness in addressing terrorist financing per immediate outcomes 9 and 10. And at the other end of the spectrum, respectively 2/3 and 80% of countries have a moderate or low level of effectiveness, i.e. they fail. So after 20 years, as judged by the FATF on the countries that have been evaluated so far, and this data is from the middle of January, between 2/3 and 80% of countries are failing. That doesn't seem to us like a good outcome in the global fight to combat terrorist financing. So I think what we've felt from the report is that whilst the architecture that was built originally and was focused on Al-Qaeda certainly makes sense, criminalization of terrorist financing and everything else that goes with that, it is important to keep updating that approach and to make sure that we are focusing our response on the threat, not the threat of yesterday or last decade, but the threats that we face today. And the last thing I would say is that there is definitely some encouraging progress being made. We see some outstanding work done on public-private partnerships in some parts of the world, particularly in Southeast Asia and Australia. There's tremendous work being done there, bringing countries together to identify terrorist finance risks that they face in that region. Lots of partnership work going on to understand the threats they face and come up with responses that are relevant to them in that region, not implemented from the top down by a global standard setter like the FATF or the UN. And then last year, in March last year, under the French presidency of the UN Security Council, a new Security Council resolution on terrorist financing was passed, Security Council Resolution 2462. And that, I think, or we think, was a good stock take of where we are in the world right now on combating terrorist financing as relates to the strategic initiatives on an international level, i.e. the work at the FATF and the UN, operational international activities, so public-private partnerships, like I mentioned in Southeast Asia, and cross-border collaboration. Clearly we can do more there, but there are some good case studies and best practice for us all to consider. National strategic responses, are countries really thinking hard about terrorist financing when they conduct their national risk assessments? Many national risk assessments we looked at just mentioned terrorist financing in passing. It's not something that is central to the assessment of financial crime in most countries. It's just an adjunct. And then national operational, how are countries actually focusing on terrorist financing? Are they using financial intelligence? Are they conducting parallel financial investigations when there's a terrorist attack? So there's a lot of work to be done. We have this framework that's 20 years old. It basically makes sense, but how people operate within that framework really needs to evolve. It's not a revolution we need, it's an evolution. And that's why we talk about sharpening the image. You know, we need to be more focused and more precise in the way we approach terrorist financing. So that is a brief review of 30,000-word document. As I say, you know, it's all nicely laid out with recommendations and so on, so people can dip into it as they wish. And again, there is a video there if you've only got 2 minutes 20 seconds of concentration left.
Right. Thanks, Tom. Tom, my last question for you. You know, you have also published a paper which is focused on the intersection of corruption, terrorism, and terrorist financing, in which you've written about how corruption can enable both terrorism and facilitate terrorist financing. So, can you share some key findings from that paper as well? You know, and also some recommendations for policymakers to consider in order to advance efforts, not only to raise awareness around these issues, but actually to address them and do something about it.
Yeah, sure. So this is another paper we published recently, mainly written by my colleague, Kayla Eisenman. And we wrote this paper in support of a meeting of the Global Counterterrorism Forum, the GCTF, which happened in London back in October. So there's been a lot of focus on the nexus between organized crime and terrorism in recent years. Last year, we had another UN Security Council resolution, 2482, under the Peruvian presidency of the Security Council, which looked at this issue. We've had the Hague Good Practices guide that came out last year as well. So big focus on organised crime and terrorism nexus. Now we can debate the relevance of all of that, but one thing which really hasn't been looked at is the extent to which corruption enables terrorism and corruption enables terrorist financing. And this isn't people mounting terrorist attacks in response to the corruption of their leaders or so on. This is how does corruption actually enable the terrorist attacks. So looking at things like how does corruption enable terrorists to cross borders, buying false documents, bribing their way across borders, bribing their way perhaps into secure areas such as airports, the risk of weak arms controls and poor immigration controls, and then also corruption in the defence and security sector, in particular this issue of the theft of salaries that should be going to the military, that should be going to the police. One hears stories of ghost armies. How did Islamic State manage to take over parts of Iraq so easily? It's because it turned out that the military actually wasn't as big as people thought, because we had these so-called ghost armies, people being paid where people didn't actually exist. And then we look at the intersection of corruption and terrorist financing. And there, of course, we talked already about how terrorist groups can operate as organized crime groups. So that as a form of corruption, trafficking in people, in weapons, in drugs to raise money. And then corruption as an enabler of terrorist financing. So a corrupt money service business that is happy to move money around the world for anybody who will pay them. So I think we felt that corruption had been overlooked as an enabler of terrorism and terrorist financing. And really, a lot of the literature, the policy literature from the UN and other bodies, doesn't really connect corruption and terrorism and terrorist financing. It connects organized crime and terrorism financing, but not corruption and terrorism and terrorist financing. And so really our core recommendation to policymakers is to just stop for a second and think, how can corruption impact terrorism and terrorist financing in your country? And don't forget that a facilitator of terrorist acts and a facilitator, an enabler of the raising of funds to support terrorism is corruption.
Right. Thanks, Tom, so much for sharing these insights with us. I think the session has been very, very valuable for me personally in terms of gaining knowledge, and I'm sure the Fintelekt community who's listening to this or watching it will benefit immensely from it as well.
Well, just a last word from me. Obviously, I hope everybody at Fintelekt stays well, stays healthy, and indeed your viewers and listeners. And I hope that we all get a chance to meet again in person at one of your events soon.
Yeah, absolutely, absolutely. I look forward to that, Tom. And for those of you listening in, please do visit the RUSI website as well. It's www.rusi.org, where you can get access to a wealth of information on this subject. And join us next Friday again for the next session, where I'll feature another star speaker. This is Shirish from Fintelekt signing out.